Hey traders, it's John Fortune here with this week's weekly Forex forecast. I hope everybody's having a great weekend as always. We are now into the second quarter of the year, and coming up next week we do have some key pieces of data coming out which are going to affect the markets. They're going to dictate moves in a number of these currencies. And with those pieces of data coming out, we do also have some potential opportunities which we're going to be talking about in today's video. Okay, so a quick look at the economic calendar, and the first thing to note is we do have coming out next week ISM data from the US. This is very important, and actually you can see in these recent surveys the labor hoarding which has actually prevented a recession up until now, because businesses had difficulty in hiring after the COVID pandemic, and so they've held on to workers as the economy has slowed down. And it will be interesting to note in the ISM surveys as they come out this month whether or not cracks are appearing in the labor hoarding mindset, which I believe is going to be the case in the near future. And of course, as that happens, this is going to increase the risk of a recession near term. Aside from that, we do also have an interest rate decision out of Australia and also out of New Zealand on Wednesday. We have the ISM services also on Wednesday, important but not something we need to plan trades around short term. And finally, we have on Friday non-farm payrolls. So quite a few things going on next week. And certainly in terms of the Australian dollar and the New Zealand dollar, as we're going to see, these are some of the best shorts that I'm looking at heading into next week. And if we can get a catalyst from these pieces of data, which is quite early on in the week, kind of Tuesday, Wednesday, then this is going to allow us the opportunity to trade in the direction of those interest rate decisions. Okay, so let's have a look at the scores heading into next week, and you can see there is a clear pattern here with the Australian dollar and the New Zealand dollar, which both have interest rate decisions next week. They have weakened in the scorecards heading into these, and I do favour both Aussie and New Zealand shorts as two of the best shorts heading into next week. Now, these markets are very unlikely to do anything before the interest rate decisions. They're probably just going to correct or chop around. However, if you can get either the Aussie or the New Zealand dollar selling off from the interest rate decisions, this is going to provide a bearish catalyst to what is already two very good short opportunities in the Forex complex. So that's what we're going to be looking for out of these. Yes, we're expecting rate hikes out of New Zealand and Australia. However, don't be surprised to see a dovish reaction if we get the central bankers coming out alongside those hikes and providing dovish rhetoric, perhaps talking about a pause or something like this, which actually has the opposite effect, of a rate hike, which normally you would expect to be bullish for the currency. But if they hike rates by just, I think, 25 basis points in the case of New Zealand, but at the same time, they signal, the end of the hiking cycle, then you could see actually weakness from the currencies, even though we've had the rate hikes. So I am looking for bearish catalysts out of these. And from Tuesday and Wednesday onwards, Aussie and New Zealand shorts, if we can get that bearish catalyst, they are going to be high up on my list. The second thing to note here is the Canadian dollar, which is in the weaker side of the scorecards. However, it is slightly strengthening. And this was actually a currency I shorted last week to no avail. But going into this week, I am still slightly bearish on the CAD. I don't like it as much as the Aussie and the New Zealand, but after the Aussie and New Zealand, it is the third weakest currency here in the scorecards on a 4-week rolling basis. So with that said, we're going to look at pound Aussie, pound CAD, pound New Zealand. We're going to also look at New Zealand yen, CAD yen, Aussie yen. We're also going to look at New Zealand franc, Aussie franc, and CAD franc. And those are going to be the primary pairs. Obviously, we'll look at euro dollar and some of the ones that I do every single week, but those are going to be the primary pairs that I'm interested in looking for trading opportunities in next week. Okay, so let's have a look at the individual currencies before moving on to the markets themselves. Starting with the dollar index, and we're on the daily chart here. You can see the dollar index has really just been consolidating around the 7-year and 2-year breakouts. And it's been neutral in the scorecards. And all it's been doing is bouncing around these levels, which on a higher time frame is just, candle wicks. And so not much has really been happening. This has been correctly identified by the scorecards as a market likely to range, to be neutral, just to chop about, not really have any direction. And this remains the case going into next week. As we start a new quarter, I would not be surprised to even see the dollar come down a little bit lower, maybe even retest the lows before starting to form a base and rising again, inside this kind of a range-bound environment. So I am slightly bearish to neutral on the dollar, but I do think as we get further into the year, we are going to see the dollar rallying primarily on a flight to safety or a safe haven bid. But for now, we're just looking at a little bit of near-term weakness, kind of bearish to neutral on the dollar. It really means I don't have a strong bias on the dollar one way or the other. If I absolutely had to choose, it would be slightly to the downside. Next is the euro. You guys know my view that we are probably coming back down to the lows at some point this year in the euro. And as it currently stands, this is just kind of chopping around. You can see we still haven't broken the previous high. Again, similar to what we looked at, really inverse to what we looked at in the dollar. I would not be surprised to see some near-term strength heading into Q2. Perhaps we take out the high. If we do that, I would be looking for a potential double top here and for this to start to roll over, which is something I've been looking for, even though this has been correcting for a while. We've noted this also in the Aussie, the CAD, and the New Zealand currencies. This idea that these are heading much lower and the dollar has upside some point this year. Next is the pound. Now, the pound has actually been highlighted for relative strength on a 4-week forward-looking basis in the scorecards, and it has outperformed a number of currencies. But again, you can see this is not a very technically, in and of itself, this is not a technically very bullish market, and we're kind of ranging between these levels at the previous high. So I am looking for this, maybe this pushes in, retest the high like the euro if the dollar does come down and we get that kind of test of the lows. Maybe that happens in Q2 as we're coming into Q2 now, but I am still anticipating this to roll over to the downside in the near future. Heading into next week, however, I have been relatively bullish on the pound and I remain relatively bullish on the pound. It is actually projected to outperform on a 4-week rolling basis. So I do like pound Aussie to the upside, and I also like pound New Zealand and also pound CAD, which we're going to be looking at. Next is the Swiss franc, and we've been tracking this double bottom breakout in the Swiss franc really since the beginning of the year. We had this big gap up with momentum, and I noted that this was the area where we could expect a much bigger break to the upside if it's going to materialize. Something which I have been pointing out since the beginning of January, that I do think the Swiss franc to the upside has quite a lot of room to go. And this is one of my favorite bigger picture plays this year. It is Swiss franc to the upside. So we have yet to really break out with momentum, but if we start to test these highs, this is going to kickstart the next leg up in the Swiss franc in all likelihood. And that is definitely putting Swiss franc long plays on my radar. Aussie franc to the downside, New Zealand franc to the downside, as well as CAD franc to the downside next week and also in subsequent weeks. As long as this doesn't reverse lower and you break down below here, this is definitely something we want to be keeping our eye on, because this will likely happen quite quickly if and when it does happen. Next is the yen. Now, the yen has lacked any real direction here, and it's kind of neutral. I mean, you can see this ranging down here technically. It is scoring quite well in the scorecard still, so therefore on a 4-week forward-looking basis, I do like Aussie yen to the downside, New Zealand yen to the downside especially, but I'm also going to be looking potentially at CAD yen to the downside, and we're going to look at US dollar yen to the downside as well. Next is the Canadian dollar, and the Canadian dollar is very bearish overall. One thing to consider here is it's very difficult at the moment to know whether this is going to be an A, B, a C here, and then we come up for a bigger A over here, a B, a C, and then this is just a bigger correction before heading lower, or whether we've already started that next leg down and this is just simply, a 1, 2, this is a break, and then we're starting to correct here. Either way, I am bearish overall on the Canadian dollar, but we did get the signal from the scorecards to start to consider covering short positions. So in kind of neutral territory on this, bearish to neutral is the view on the Canadian dollar. I would not be surprised to see this pushing higher. Maybe we pull back and we push back to retest this. If that's the case, I am still preferencing Canadian short plays, but you can see I haven't highlighted it in gold because I prefer New Zealand shorts and Aussie shorts over and above CAD shorts. So only after those two currencies would I look to go and short the Canadian dollar. And of course, the CAD is benefiting near term from that bounce in crude oil. Next is Aussie dollar. Ever since trading to the high, I was highlighting the fact very similar to what we're looking at in the euro, where we're up in this area and we're kind of testing previous highs, but I'm saying to you, I believe we're coming down to the lows over the course of this year. The same I was saying with the Aussie and New Zealand. You can see we've already started that journey. These markets are kind of leading, in my opinion, what we're going to see in the pound and the euro to the downside over the course of the rest of the year. You can see here we've just consolidated, and it does look like heading into next week that we're going to get a breakout of this consolidation because we have that interest rate decision catalyst. So any break to the downside here on a bearish catalyst, that is the opportunity to start to look for shorts in this currency out of this near-term consolidation as we start the next leg down. So I do like pound Aussie to the upside, Aussie yen to the downside, Aussie franc to the downside to play this. And one other thing we're going to be looking at is what happens if we don't get a bearish catalyst, but we get a bullish catalyst. Well, we have a backup currency here with Aussie CAD, where we can look for potential long positions. And finally, New Zealand dollar. Again, I was highlighting that this was overstretched at the beginning of the year and we were likely coming back down to the lows. We started this journey with this double top breakout, and again, you can see the consolidation. This is likely to be resolved next week, and if this is resolved to the downside primarily, that is going to give the green light if we get a bearish piece of price action from the interest rate decision. We get a bearish catalyst. Again, perhaps they talk about the pausing of the hiking cycle or the ending of the hiking cycle, and we start seeing New Zealand selling off. Then pound New Zealand to the upside, New Zealand yen to the downside, New Zealand franc are my three go-to markets. And again, if we get the opposite and this starts to break higher with momentum, we can consider New Zealand CAD to the upside as a kind of plan B setup there. Okay, so let's have a look at the markets themselves heading into next week, starting with crude oil. I do not have a very strong bias on crude oil because overall, crude oil is actually in the negative side of the commodity scorecard, but it is actually rising in the scorecard. So this is really a weak market which is starting to see some short covering and starting to push higher. So going into this week, I do not have a strong bias on it. On balance, my own framework here points towards being short or doing nothing in crude oil. So what I'd like to see is I am looking for potential short opportunities in crude oil, and especially if you trade intra-week, if this breaks down and you get a breakout of this trend like this, this would be the opportunity I'd be looking for a pullback and then down into the 72 area. Once we breach the 72 level, downside is likely very limited in crude oil. So this is the profit-making opportunity for any shorts in crude oil in all likelihood next week. But again, let me just reiterate, I do not have a strong bias in this next week, and I'm very unlikely to trade this at all next week. If I do, it'll be to the downside, but there's a very good chance I do not trade crude oil at all next week. So the first market we're looking at here is pound Aussie. Now this was a market highlighted in last week's video, but the Australian dollar didn't really go anywhere versus the pound last week because leading up to this interest rate decision, you often see these markets just consolidate. So what I'd like to see going into next week with the interest rate decision, if we get a consolidation and then we get a breakout to the upside on a bearish catalyst, I'm going to be looking for potential pullback, and that is the opportunity to look for long positions into the 1.8650 area. Next is Aussie yen. You can see we're kind of consolidating up here as well. So what I'd like to see is any pullback in this market. And again, I'm not going to be interested in these until the interest rate decision takes place. If we get Aussie yen breaking to the downside like this would be an opportunity to look for a bear flag post interest rate decision. And I'm going to be looking down towards the 87 area in Aussie yen. Now you don't have to hold on to profits all the way to the profit target. It's just once you get to this area, your odds of continuing lower have greatly diminished. So this is really a max profit taking opportunity, but you could put profits anywhere along the way down, but this is the max profit taking opportunity I'd be looking for. Next is Aussie franc, and again, like the others, based on Australian dollar weakness. So any consolidation, I'm going to be looking for a break lower in this market. I'm going to be looking for a pullback and a follow through down towards the 0.6040 area. Now there is one other way you can trade these, and that's if you get Aussie strength, but the catalyst itself is not particularly bullish. Now what you could see then, and it'd be the same for all of these pairs here, pound Aussie, Aussie yen, Aussie franc, if you got, for example, the Australian dollar rallying into these highs, you can also look to fade the interest rate decision if you so wish. The best thing to do is wait till the following day. If you're going to fade an interest rate decision, you don't do it straight away because you can see this continuing higher. What you want to do is wait for usually the following morning or day, let price start to stall out, perhaps at a previous high, and then you could potentially fade this to the downside. Either way, I'm only looking to be short Aussie franc, Aussie yen, and pound Aussie. Buying is not an option in these markets for me next week. And finally, we have Aussie CAD. Now, Aussie CAD is just a backup plan. I really like these markets to the downside, but if we were to get some real strength and a bullish catalyst, perhaps they came out and they said they're going to have to hike rates more than they thought. I think that's unlikely, but hypothetically, if that were to be the case, you know, we are prepared for multiple options here, because if that happens, you can then look for a pullback and a consolidation and a potential inverse head and shoulders in Aussie CAD. And I'd be looking up to this high over here, roughly at the 0.91350 area. But again, I'm looking to be short these markets here. This is only a plan B currency if we get some real strength and perhaps a bullish catalyst from the Australian interest rate decision. Otherwise, I'm not going to be trading Aussie CAD at all next week. Next are the New Zealand pairs, exactly the same as the Aussie pairs. These markets are unlikely to do anything until Wednesday, and then we're likely to get a move on the interest rate decision. If that is to the upside, that would be the opportunity to look for bullish setups into the 1.990 area. Next is New Zealand yen, only looking to be short New Zealand yen, only looking to be short New Zealand franc. Buying in these two markets is not an option for me next week. And pound New Zealand, only looking to be long. Selling is not an option. So if this market pulls back, and then we get on Wednesday a bearish catalyst, I'm going to be looking for this kind of bear flag setup. I'm going to be looking down towards the 81.40 area for sell setups in this market. Next is New Zealand franc. Now again, as I said, I can only be short or do nothing next week. So if this market pulls back and we get a bearish catalyst, that is going to be the opportunity to start to look to implement those shorts for short opportunities down to, I mean, the previous low here in terms of risk to reward would probably be a good target, because otherwise you're risking a bounce just for this. But if we do trade into the 0.5650 area, this would be my max profit taking opportunity next week for shorts in New Zealand franc. And finally, we have New Zealand CAD. So New Zealand CAD, really a plan B setup like Aussie CAD. If we get, for whatever reason, a strong bullish catalyst from the interest rate decision and we see this breaking higher, that is the opportunity to look for this as a potential inverse head and shoulders. And you can look for buy setups into the previous high over here or up to the 0.8540 as a max profit taking opportunity that I'm looking at next week. Next is pound CAD. Now pound CAD is actually making its way lower because of the strengthening of the Canadian dollar. So I don't think this is going to be one of the best markets. I do prefer these markets, these ones highlighted in gold next week. However, if we start to pull back and test lows, especially down in this area, this would be an opportunity to start to look for long setups. I think it's unlikely based on this we're going to come all the way back up to here. But if we do start to bounce in these areas, you can look for a run up to the previous high over here, perhaps next week in pound CAD. Again, I don't quite like the price action here. This is why this is not highlighted in gold. It's not one of my preferred markets, but I would still consider long opportunities, perhaps on a pullback down to these areas in pound CAD next week. Next is CAD yen. I'm looking at either being short or doing nothing in CAD yen. Perhaps we come up higher, we double top in this market next week first, and then we start to sell off like this. If we get this kind of opportunity, this is going to be something I'm going to be looking at for potential shorts, perhaps up on the high or lower down. And if we trade into the 96.50 and this inverse head and shoulders breakout area over here, this is going to be a great profit taking opportunity next week in CAD yen. And again, just a reminder, I'm not looking at trading all of these markets next week. These are all on the watch list so that if and when opportunities do appear, we can react and we can take the opportunities in the direction of our plan before the week actually starts. And the final CAD pair is CAD franc. Again, none of these are my preference next week. The 6 markets in gold are. But if we start to test the highs, look for this as a potential double top in this area. So I would be interested in shorting CAD franc next week if the opportunity appears. And if it starts to break lower and you get this kind of bear flag set up, this is going to be the opportunity I'll be looking for in CAD franc down to the 0.67100 area. Down below here, you start to increase the odds of a bounce or at least price stalling out. So this is my max profit taking area next week in this market. Next is euro dollar. Now, I'm pretty much neutral on euro dollar. I think this market's likely to range, but we do have some edge in being long the euro over the dollar based on the scorecards. Any breakout in this market, any pullback would be viewed as an opportunity to look for long positions, probably up to the previous high and then onto the 1.0960 area. The other thing we do have next week is non-farm payrolls. So again, it tells me that this market is likely to range. The dollar pairs are very likely to range and do not very much into non-farm payrolls. That does often happen. So just bear that in mind going into next week. We may see a lack of volatility across the board in the dollar pairs next week because of non-farm payrolls coming up on Friday. And finally, we have US dollar Japanese yen. Now, I like US dollar Japanese yen to the downside because I do believe at some point in Q2, we're going to see a return of risk off. Maybe the first week or so, we see a bit of risk on, but I do think the risk of a bigger risk off or more deflationary regime kicking in is definitely on the cards. Now, if that happens and you are short the US dollar versus the Japanese yen, this is a market that would benefit from risk off because the yen is actually more risk off than the dollar, so you would see this going down. Whereas if you're short euro dollar and we get risk off, then you're going to be on the wrong side of the move. So I really do like, if you're going short dollars here against another currency, dollar yen is the move that I would like to look at heading into next week and into Q2. Any pullback in this market would be viewed as an opportunity to look for shorts at the highs, or if you break down like this. And I'm going to be looking down towards the 1.3025 area. Okay, so wrapping up the video with gold, silver, and Bitcoin, starting with the gold-silver ratio, and look at the gold-silver ratio, absolutely tanking. And going into next week, the commodity scorecards also confirm we should be looking, if you're going to be trading these, at silver longs over and above gold longs heading into next week. Because of the bearish to neutral nature of the dollar, I do favor long gold, long silver, and long Bitcoin for the time being, unless or until that dollar score changes. And out of those, I do think silver longs are actually the best play heading into next week. So starting with gold, and we're in the daily chart here, you can see after such an explosive move, this market looks like it's actually forming a 1, 2, 3, and we've got this fourth wave consolidation. In fact, fourth waves are very often sideways in nature, so you can get pennants in fourth waves, you can get flat patterns, which are just these kind of sideways rectangle patterns, and that's because of the psychology of what's happened. The third wave here is so strong that there are very few traders willing to sell here. That's why you get the sideways nature of fourth waves, whereas second waves are often deep because over here much more interest is in the selling. So, you know, sellers are very courageous over here. When the market pulls back, they want to short it, but they're not so courageous over here after this move to the upside. So it does look like we're in a fourth wave, and as a result, any pullback in gold is still viewed as an opportunity to look for longs into the 2020 area. This previous high, once we break this, this is where the fifth wave will potentially start to run into trouble. So I do like gold to the upside next week, as long as the dollar remains bearish to neutral. Next is silver. Now, silver was identified as a potential long play, and we traded right into the target. If I zoom in here, you can see we literally wicked the target that was outlined last week, and that was the overall move to the upside in silver. So going into this week, any pullback in silver is still viewed as an opportunity to look for long setups. I'm going to be looking up towards the previous high as a first target, but into the 25 handle. That is the max profit taking area for next week in silver. And last but not least, we have Bitcoin. Now, Bitcoin has been consolidating again. Whilst we have a weaker dollar and we have especially tech, although tech upside does seem limited now, I do favor Bitcoin long positions. I prefer gold and silver, especially silver. But on balance, it's not highlighted in gold, so it's not something I have a very, very strong opinion on. But on balance, I do think we probably see a bit of risk on heading into Q2 before risk off kicks in. And so I would be on balance looking for long trades into the 31,000 level in Bitcoin. So that is it for me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the room each day where I go through these markets and the setups that I'm personally looking at with members on a daily basis for over 75 markets in different asset classes, including stocks, bonds, Forex, and commodities. So if you'd like to know more about the benefits of GMT membership, why not check out the link in the description below and in the pinned comment where you can get a 2-week free trial totally risk-free. So have a fantastic weekend. I'll see you all next week.